The cost of a home is far more important than the price, right? Housing inventory is at an all-time low. There are 39% fewer homes for sale today than at this time last year, and buyer demand continues to set records. Zillow recently reported, quote, newly pending sales are up 25.5% compared to the same week last year, the highest year-over-year increase in the weekly Zillow database, unquote. Whenever there is a shortage in supply of an item that's in high demand, the price of that item increases. That's exactly what's happening in real estate right now. CoreLogic's latest home price index reports that values have increased by 5.5% over the last year. This is great news if you're planning to sell your house. On the other hand, as either a first-time or repeat buyer, this may instead seem like troubling news. However, purchasers should realize that the price of a house is not as important as the cost. Let's break it down. There are several factors that influence the cost of a home. The two major ones are the price of the home and the interest rate at which a buyer can borrow the funds necessary to purchase the home. Last week, Freddie Mac announced that the average interest rate for a 30-year fixed rate mortgage was 2.87%. At this time last year, the rate was 3.73%. Let's use an example to see how that difference impacts the true cost of a home. Assume you purchased a home last year and took out a $250,000 mortgage. As mentioned above, home values have increased by 5.5% over the last year. To buy that same home this year, you would need to take out a mortgage of $263,750. So how will your monthly mortgage payment change based on today's lower mortgage rate? We can compare the difference in monthly payments from last year on a mortgage amount of, let's say, $250,000 and an interest rate of 3.73%. The monthly mortgage payment would be $1,155. Today, the mortgage amount would be $263,750 due to the price appreciation, but the interest rate is now 2.87%, which means your monthly mortgage payment would only be $1,094. So you would save $61 every month. We're using a 5.5% increase in home values over the last year per CoreLogic. Freddie Mac weekly mortgage rate, basically. Of course, these rates change all the time. These are it's probably not up to date. Keep that in mind. That was not a week ago. That was many weeks ago, I believe. That's a savings of $61 monthly, right? Which adds up to $732 annually and $21,900 over the life of the loan. So even though home values have appreciated, it is a great time to buy a home because mortgage rates are at historic levels. Please feel free to contact me anytime regarding any of these topics. I'd love to fill you in. My name is James Graff. This has been another Mortgage Minute brought to you by Advisors Mortgage Group. With that, I have to thank you for listening thus far and hope that you have an absolutely wonderful day. Thanks again.